I am Suyash Maheshwari and this is First Take, where we break down the morning action on the Dalal Street and bring to you the top stocks in the spotlight today. Now, Indian markets opened on a positive note with the first tick for Nifty coming in at 19,286. The positive sentiment is on the back of a turnaround in global markets, where the US market snapped their 5-day losing streak, with S&P 500 ending 0.73% higher, Dow Jones ending 0.62% higher, and Nasdaq ending 0.9% higher. Now, this was on the back of key data releases in the US. PMI data for the month of September came ahead of expectations, with both services and manufacturing PMI coming above the 50 mark, which indicates expansion. Now, the street had expected both numbers to come in below the 50 mark, and that's why we are seeing a good bit of run up in global equities. Asian markets are also trading firmly in the green this morning. Now, coming back to Indian markets, we have seen a bit of a recovery. Now, Nifty has rescaled 19,300 levels. Now, this is as of 9:45 a.m. this morning. Nifty is currently hovering above the 19,321 mark, up about 70 points or so. Nifty Mid Cap 100, on the other hand, is up about 0.26% at 38,697 mark. Nifty Small Cap 100 as of 9:30 a.m. this morning is up 0.14% at 12,481 mark. And India VIX, which is the volatility index, is up about 1.03% at 11.02 mark. Now, with that, let me also bring on our first guest for the show, who is Mr. Brijesh Iyer of IDBI Securities. Hi Brijesh, welcome to the show. I mean, after the shakeout that we saw on Monday, what are the levels that you are tracking on Nifty?
Yeah, good morning, Suyash. So the market looks quite like today it has been taking support at 19,300 level, but that there was a very huge damage which we saw on Monday session, and the Monday, for the very first time the index broke 19,500 level. So there has been a sell-off in the market, and today what we are observing is just a breather of that particular sell-off. So the trend from the technical perspective, the Nifty has broken the 50-day moving average, which is somewhere close to 19,600 level. So as long as it doesn't scale above 19,600 level, the directional trend for the Nifty will be weak. There can be some amount of bounce can be seen, because today again, since the global markets were quite okay, and the Nifty is taking some support, there can be a slight bounce back in the market. But that fear of Nifty coming close to 19,200 still remains valid. So it's a cautious approach. Tomorrow is a monthly expiry, so there will be a lot of positions which will be getting squared off. So one has to understand what kind of rollovers we see for the next month, and accordingly, whenever it would be wise to wait for some further correction close to 19,200 level. So that would be the first area where the positional bets can be taken. So it's kind of a wait and watch kind of a market for next couple of days.
All right, that's the view on Nifty. Now, Nifty Bank also, Brijesh, has formed a double top pattern on the price charts. Will that drag the index lower, since we have seen it break all crucial support levels?
Bank Nifty, however, when all this while when the Nifty was holding 19,500, Bank Nifty was one of the stock which was underperforming. So there was a huge amount of distribution in the Bank Nifty for the last 23 trading session. And for the last 23 trading session, the Bank Nifty was trading below the 50-day moving average. And in Monday's session, we saw that Bank Nifty has tested 200-day moving average. So normally this 50-day, 200-day, these are the crucial level which normally all the laymen do watch on their charts. So technically, if this 200-day moving average, which was exactly the Monday session low, which is almost 43,029 level. So by any chance, in the next couple of days, if the 43,000 level is broken, then there is a fear. Now another 1,000 odd points of corrections can be seen in Bank Nifty. It's Bank Nifty is given a breakdown. I will still maintain what is the recovery. What we are observing today is just a breather. There can be a small intraday kind of a pullback because the charts are in the oversold zone. But then directionally, I would advise to wait for one or two trading session, then take the directional view.
All right, Brijesh. Now, Nifty Mid-Cap 100, which was, moving in a range of about 39,500 to 40,900 for quite some time, on Monday slipped below that support zone. I mean, we are at a 2-month low now. At what level would you, be comfortable entering the Nifty Mid-Cap pack again?
So there has been a clear-cut breakdown. The first support levels for the mid-cap 100 somewhere close to 38,000. So only when we see those levels, so I think that would be the first level. If we see some amount of buying coming at those points, then I think we can start with the very stocks specific ideas. I think we can take that buying opportunity. But then definitely, I believe we should wait for 38,000 level, somewhere close to those levels for entering the long positions.
Hi Brijesh, Amit Ranjan here. Before we let you go, in this highly volatile markets, could you give us your top 5 picks?
So all this while, I think the auto is one sector which I'm extremely bullish. I think even though when the market's correcting, this space will act to use some support to the market. Within space, I think Hero MotoCorp is one stock which is extremely bullish. I think somebody who wants to take some positional kind of a view and who doesn't want to fear about the market, then I think Hero MotoCorp is a perfect bet. So one can take the long position at the current level. The stop loss for the trade would be somewhere 3,099 and close to 3280, 3290 should be the target for the Hero MotoCorp. So that would be the first bet. After that, I would like to take a call on the IPCA lab. So definitely this is one space which has given a very strong breakout. Even in the Monday session when the market was correcting, the counter was positive. I would recommend to take a long at the current price. The stop loss for the trade would be 967. I'm looking somewhere close to 1037, which is nearly 5 to 6% kind of a gain. So that should be another bet. CDSL is one space which is again outperforming the market. One should take a position at the current level. The stop loss would be 1334 for the price target of 1432. Again, it is somewhere like 5-6% kind of a bet on the higher side. So this is extremely positive. One more stock which I would recommend is the Muthoot Finance. So Muthoot Finance is a very strong counter. I think even though if the market corrects, the growth in this counter would be much higher. It looks like the stock is poised to retest its all-time high level. So I think one should take a buy call in the Muthoot at current level. The stop loss for the Muthoot Finance would be 1265 for the price target of 1366, 1370 level. Again, this is a 5%, 5-6% kind of a bet. All the targets which I'm saying, it should be a next 7 to 8 trading kind of a session. Within this trading session, it should be achievable. And then the one last counter from the auto space is the M&M. So I think M&M, there is from the derivatives point of view, there is a 1500 price. There is a lot of put writing, so that's going to act as a major support for the M&M. M&M can be bought at the current price. The stop loss for the M&M would be 1545 for the price target of 1620. So this is slightly a trading bet. It's a kind of 3 to 4% kind of a gain. So I think this counters which I'm picking up are the counters which has never corrected in the market. These are the outperformers for the from the heavyweights. So I think whenever the Nifty takes support, these are the stocks which will outperform.
All right, that's the view coming in from Brijesh. Thank you, sir, for joining us this morning. Hope to see you soon sometime again.
Thank you.
Sure.
Now, Amit, before we move on to our next guest, a few companies are to come out with their earnings today. Now, first of all, let's take a look at Tech Mahindra, India's 6th largest IT company, is expected to come out with its earnings during the market hour. What are the broader expectations?
Thank you, Suresh. Tech Mahindra is expected to report a muted set of numbers this quarter. Let's look at revenue. The company's consolidated revenue is likely to fall by 0.35% quarter on quarter to 13,113 crore as against 13,159 crores in the June quarter. This would be due to weak performances across communications and enterprise segments. Profits. The net profit is estimated to fall 4.3% sequentially to 663 crores this quarter, compared to 692.5 crores reported in the first quarter of the financial year 2024. Margins may contract to 6.3% from 6.8% in the June quarter. This is due to bankruptcy of the client and various business restructuring decisions and actions. Tech Mahindra's deal wins are also expected to remain muted in the second quarter due to weak macros and slow decision making. Analysts forecast new TCV, that is the total contract value, at between $400 and $500 million. According to analysts, the street will be focusing less on the numbers and more on the turnaround possibilities under their new MD and CEO, Mr. Mohit Joshi. Other than that, what will be the street focusing on? Turnaround strategy and implications of recently announced organization restructuring that will be effective from January 2024. Another thing that they'll be focusing on are margins in outlook for margins in the financial year 2024, health of deal pipeline and positioning in cost takeout deals, and also lastly outlook for revenue growth in the top telecom clients. So this is what the street will be focusing on other than the numbers in the coming days.
I'm looking at the stock of Tech Mahindra this morning. It's trading with marginal gains, Amit, up about 0.2% at 1,157 levels now. But in the last 1 month, the stock is down about 11%, severely underperforming both Nifty and Nifty IT. I mean, even if you look at the 12-month period returns, the stock is up about 6.5%, whereas Nifty IT has given returns of about 7.5%. So far, Tech Mahindra seems like has been an underperformer, and even, I mean, it's currently like 13% lower than its 52-week high. So a fair bit away from its, recent highs that we have seen.
Yeah. Let's hope the new CEO and MD who has taken over just a few months ago, that makes a change. And that's what the market is expecting.
For sure, that will definitely provide some direction. Now, another company which is due to come out with the results is Axis Bank. What are the expectations there?
That is much better. Net profits have gone up over 7%, almost 7.6% expected to 5,732.7 crores as against 5,329.8 crores in the same quarter last year. Net interest income, the difference between the interest income a bank earns from its lending activities and the interest it pays to the depositors, has gone up, is expected to go up 15.4% almost to 11,957.4 crores as against 10,360.3 crores the same quarter last year. The net interest margin, a measurement comparing the net interest income of a financial firm generates from credit products like loans and mortgages, is estimated to contract 3.2% to 3.9 to 3.95% levels in the September quarter, as against 4.1% in the previous 3 months before this. This is basically due to the rise in provisions and higher wage expenses and elevated credit costs. The gross non-performing assets, that's a good one, decreased almost 20%, are expected to decrease almost 20%, coming down to 2% from 2.5% the same time last year. Both gross and net non-performing assets are likely to remain unchanged from the previous quarter. Provisions, which refer to the amount a bank must set aside to cover losses from loan amounts, are likely to double to 1,086 crore from 549 crore a year ago.
All right,
so that
Amit,
is what analysts are expecting in when it comes to Axis Bank.
Great. Also, we have on the show Mohit Gang, who's a CEO and co-founder of Money Front. Good morning to the show. Welcome to the show, Mohit. I mean, October is doing its thing again. You know, the kind of volatility that we are seeing in the past, couple of weeks. What's your overall outlook on the market at this point in time?
Hey, hi Suyash, always a pleasure to be on your show. Look, I think for reasons well known or not known, I think October is always called a bloody October, right? So, and it's doing its course out here. However, the script is more getting played outside of India than within India, right? Within India, you don't have a compelling case for a correction. Perhaps maybe an outline case on valuations getting stretched on the mid and small cap side. However, the global script doesn't seem to be falling favorably, especially the oil, the rise in crude oil prices, which is more so because of the geopolitical escalations or tensions which we are seeing. However, it hasn't shot past a psychological barrier for India as of now, which I would put it at around $100 a barrel. At around 90, 91 odd dollars, we have been struggling in that range. But somewhere it seems if the escalation were to rise up further, then perhaps we might just see that tag of $100, and that is what is playing out in the markets. And the US 10-year yield, which is at a 17-year high of over 5%, is something which is like really weighing on all the emerging markets, not just India. And I think if the yields don't ease off out there, we might see some exodus on the FII flows. So these are the two things which have been like really playing havoc on the markets of late. And as I said, the valuation story has been catching up. But to counterbalance the same, I think we have the positive DII story, which has been extremely robust, extremely steadfast in terms of flows and everything. And also the festive season and the festive season, the cheer which is all around. I think the consumption story doesn't seem like it is dying very soon in this country. You have the Navratri and then the Diwali and then leading right up to Christmas, and plus coupled with all the festivities, we have the World Cup, right? So I think the consumption story is fairly robust. The earnings quarter this time around has been bit in line with expectations. No major big surprises out there as of now, but yeah, I think could have been better, but I still will take it as a positive on the base at which we are going. So all in all, I think the domestic story remains robust. Global macros is something which all of us need to watch out for, and which can play a bit of havoc in the market for a short while. My sense is for next 1 month odd, I think everyone needs to be a little cautious on the market, given the way geopolitical situation is shaping up.
Hi Mohit, Amit Ranjan here. At the current levels of 19,200 to 19,300 on Nifty, how is the market priced valuation wise? Can long-term investors initiate fresh positions, or should they wait for more corrections? What are your views?
Look, honestly, I think to put a peg on the overall market is a little difficult out here. The mid and small cap zone might seem a little stretched, honestly, though on the median valuations for last 10 years, where they continue to trade at a certain amount of premium to the large cap index, I think that gap has currently increased, not because the mid and small caps have significantly outdone themselves, but because the large cap index has underperformed to a fairly large extent. If you see the Nifty 100 companies, 60% of those companies have actually been in a negative zone or have delivered less than single digit returns in last 1.5 years. And that's been the major, what do you say, story to my mind. I think there is enough and more potential in the large cap space. If you see just the top 100 companies of Nifty, I think bulk of them and very big names, in fact, the entire IT pack, large cap, the Reliance Industries, HDFC Bank, Axis Bank, their names galore, Wipro, right? So there are names galore who have actually just not done anything for last 2 years put together. So my sense is there's a lot of value on the large cap front right now. On a relative basis, the trade seems more favored to a large cap. Plus, I think with less volatility, investors will be more comfortable entering that space right now. And if you were to ask my pick, I think I'll rather move my trade towards large cap as of now.
Now, Mohit, PMI data coming from the Eurozone suggests that the entire bloc is, kind of shifting towards that recession. US is also facing recessionary headwinds. I mean, the data or the macro data is coming out is all right, but you have high cost of borrowing and elevated gas prices over there. In light of all this, what are the potential implications for the Indian economy if, the global economy does in fact fall into a recession? Because currently we seem to be doing all right, but, what could be the contagion effect?
Look, Suhesh, I think there are three things, and as Benjamin Franklin rightly said, that taxes, and I'll add corrections in the market, these are inevitable, and one has to really brace up for those. And I think Indian investors reaped a secular, as in for last 1.5 years, we've all been in a secular kind of a one-way up rally, right? And investors have really made money. But however, the nature of markets is such that we have to brace up for a correction. And my sense is one is just looming large on us in terms of the way global macros are shaped up. You are right when you point out that the Eurozone has its own struggles, and US also on and off, the signs are mixed out there. However, there's no clear indication which way the US is headed. I think market is more watching whether the landing in US will be hard or soft, and I think that's the only thing, whether Fed continues to keep rising rates and prepares US economy for a hard landing, or they were to pause, take a calibrated outlook on the economy, pause for some time, and maybe take the economy to a soft landing kind of a thing. So that's the only thing which market is watching, and I think US perhaps will give us the biggest trigger point in next 3 months or uh, right. And I think one of the first things to look out there is the 10-year yield and the signaling by Fed, right? So if we have these two things right, then I think more or less everything will fall in shape. However, as I said earlier, Indian economy cannot be isolated. We might boost that our global whatever our consumption story is fairly robust, local manufacturing is shaping up, so on and so forth, and domestics are looking very good. However, we are coupled to a large extent, as all emerging markets are, and if US were to have hard landing, then I think the impact will be there to show on Indian economy as well. So my sense is, as I said previously, investors should take a very cautious and precautionary view of the markets for at least a month or so, if not a quarter. Let the result season pass by, let some festive cheer go down, and let's see how the geopolitical situation shapes up. My sense is the geopolitical situation is on the verge of escalating. It's out there. I think Israel is about to intensify its effort on the ground, and everyone wants to see, once Israel enters the
Right.
region through ground forces, how will the other neighboring countries react? And I think that will give us a lot of indication on how the markets will shape up further. So my sense is there's those first next 10-15 days are extremely critical for all of us to watch out in terms of how the geopolitical situation braces up. And yes, you cannot just put India in isolation and say nothing will happen because our domestic story is strong. I think any kind of a geopolitical rupture,
All
moving on to oil and moving on to US yields, will always have an impact
All
on
right,
India.
Mohit. I'm sorry, we'll have to cut you short here. We are running short of time. And with that, it's a wrap on this edition of First Take. Keep watching News 9.